Hey, what's up guys? John here. I'm going to walk you through a chain of situations that I think are about to take place in America. I made some bold bets over the last 30 days, one of which was the banking collapse. This was a month ago, and about a week and a half to 2 weeks after that, we started having SVB and all these situations. So I called that before it happened. Then 2 weeks, and I'm just saying this for not as like a bragging or anything like that. I'm simply saying this because I'm going to be making a bet in this video of what is actually going to happen, and just showing that some of my calls in the last month, for example, this right here, commercial real estate collapse, it's doing worse than 1929. Funny enough, today and the last 2 days, everyone is now just talking about a commercial real estate collapse, right? They're talking about this really big problem. I mean, the oldest article here is 2 days ago, right? What is going to happen next is going to be pretty crazy. And in this video, I'm going to walk you through it. So please hit the like button if you want. If you don't, it's fine, but still hit it. Also, today's video is sponsored by my company, GreatCreditFast.com. We help people fix their credit so they can position themselves to invest in distressed real estate, maybe start a business, but help improve their situation. And it gets a hell of a lot harder to get ahead with bad credit, especially as banks are tightening up their lending standards. So if you need help, we'd love to help you at GreatCreditFast.com. Take a look at this. So Janet Yellen came out today, said Treasury is ready to take additional actions, if warranted, to stabilize banks. Now, what I think is going to happen is I think we are going to start to see a big run on banks. It's already kind of starting more. Deutsche Bank looks like it's in pretty big trouble. Default protection costs spike as U.S. bank crisis spreads to Europe. They're going to continue likely increasing interest rates, and at the same time, they're going to continue to devalue our currency. So you start to think about what is that going to do? We're going to start to see more and more and more people pull money out of banks, not because of like panic or fear, but instead they're probably going to pull money out because they need money to service the increased cost of their debt, and they need money to live, right? And they're not making enough money, so they're just going to keep pulling it out. People are going to start selling stocks. They're going to start selling things to make ends meet. As that is all happening, we're starting to see more and more defaults. Commercial real estate, I think, is going to be a really, really big problem, probably unfolding over the next 3 to 24 months. And I think that we're going to start to see some really big concerns in residential real estate. But I think we're going to start to see a huge consolidation of banks. Right now, Bank of America trims banking and lending. Wells Fargo, same thing. They're cutting jobs. A lot of people know this. But what is fascinating here is that 67% of all commercial real estate loans are held by small banks, and 37.6% of loans overall. So a lot of these small banks are holding a lot of bad loans, right? And so what is actually going to happen is we're going to start to see these consolidations, and we're going to start to see just a few really, really, really big banks. And when there's a few big banks, these banks have more power and more authority because you have less options, right? And as that's happening, I think this all kind of ties together because Biden came out today and said, in my first year in office, we protected more lands and waters than any president since, we've also made the largest investment to fight this. Now these keywords, these buzzwords that a lot of people are talking about now, and it's getting really in our faces in the mainstream, and everyone's talking about this. This is going to be a huge, huge role. It's going to play a massive role in real estate. It's going to play a huge role, whether it be commercial, residential real estate, auto loans. It's going to play a massive role in everything. Look at this. Fannie Mae, they just came out. This came out today, this came out 4 days ago. Mortgage giant Fannie Mae tackles climate risk, but changes to underwriting may take several years. And so they're now getting information from this company, First Street Foundation and Jupiter Intelligence. So these two companies are going to help judges hiring these modeling firms. So these firms are going to model out these, quote unquote, dangerous areas. And they're going to say to figure out just how to factor these risks into home values and mortgage underwriting. So what does that actually look like? If you have a home that they view as, in a risky area, the insurance costs for that home will skyrocket, and the ability to get a mortgage there might diminish greatly. You might have to put a lot more money down, or you might not be able to get financing, right? This is going to play a big role. They say this is going to be, it's going to take a while for it to roll out. Well, of course it will. This isn't going to be something that's going to happen overnight, but this is likely going to happen. I'm looking into the company, and I mean, right there, the buzzwords, they reference this company as well, and they say that they talk about commercial real estate here. Look, the flood risk has been underpriced in mortgage and real estate-backed markets due to outdated federal government flood maps. And so they mention commercial real estate. By and large, we find that most commercial real estate firms don't presently have a good grasp of what change could mean for repricing of assets. So how does this work, right? Like if you are a residential real estate investor, if you are a whatever industry you're in, you're likely to be impacted by this, right, in some type of capacity. Even if you're just a homeowner, right? I personally think that one of the smartest things people should be doing right now is, of course, getting out of high interest consumer rate debt. But second is also if you own a home, looking at these maps, kind of getting an understanding of where they are saying that there's more risk or less risk, because this could have a pretty big impact, right? I personally think that we're going to start to see this happen in the coming couple of years. And as that begins to happen, I think that we're going to see property values plummet in certain markets, and I think we could see values stabilize or even increase in other markets. This is going to be huge. But it all makes sense. You have all these banks, they start consolidating, and then when there's the consolidation of banking, then they have more authority. And when they have more authority and these new standards come in, you have less options, right? Again, this isn't going to be something that's going to happen overnight, but I am pretty confident that this is where it's happening. I mean, for example, CEO of Redfin, he came out, and I'll actually pull this article up while I'm talking to you. So he came out and said, CEO of Redfin, he came out and said, home buyers, and this was a year, and just to put this in a context. So this was September 3rd, 2021, and he said home buyers are vulnerable. In vulnerable parts of the country are not deterred by those realities. The buyers themselves are driven by affordability, and the most affordable places in America are the places that are the most risk that are being affected by this, right? He said they're going to be fooled. They're going to be flooded by hurricanes. They're going to be affected by wildfires. If you look at where people are moving, it's Florida and the Southeast, which is especially flood prone and is also incredible heat risk and temperature rises. And they're moving to places like Phoenix and Vegas and Utah. But he goes on to say right here, I think this idea that climate is going to be factored into how people think about housing, it hasn't yet. The only people who have figured this out are the actuaries, like insurance companies and banks. The people who have to calculate the cost of insuring these properties, who, is Kelman, the CEO of the last 15 years. Increasingly, it's going to get harder to get insurance. It's going to get harder to get a loan for these properties because the lenders are going to see the writing on the wall that it's collateral risk. So that's what I think is going to happen. I think we're going to start to see this whole thing kind of play out. I'm not saying this to scare anyone or to get anyone fearful, but at the end of the day, I try to remove the emotion from finance so we can get a clear picture of really what's happening in the economy so we can position ourselves accordingly. What do you think about this entire situation? Do you think that this is going to play out, let's say, by 2025, like where these standards start to come into play? I think so. And we look at how big this commercial real estate problem is. I mean, it's crazy to me. It's absolutely crazy. Just in the last, call it 90 days, 100 days, PIMCO, they have a real estate portfolio, primarily commercial, San Francisco, LA, Boston, New York. They purchased it for $3.9 billion, over $2 billion as a down payment, and they're defaulting. They can't make their bills, right? Crazy. KKR, Blackstone, BlackRock. You look at all these big firms halting withdrawals. They're not letting their investors get their money out on these portfolios. And why? Right? It's because the portfolios are performing horribly. I was talking about this before, but it makes sense. You have people working from home. I mean, it's common sense. People working from home, they're downsizing their offices. The economy is getting a little bit more shaky. And insurance costs are going up, property taxes are going up, mortgage rates doubled from 3 to 7% in the last, call it 15 months. And so as that is occurring, what's also happening? Rents are plummeting, right, on their existing units because there's more supply. And so It's a bad situation unfolding in commercial real estate, and I think that it's going to be one of the first dominoes to fall, which is going to push forward on this massive consolidation as we start to see some really big changes. So I think there's going to be massive opportunities in real estate. I think there's going to be massive opportunities to make a ton of money, but I think that also there's going to be even more opportunities to lose money if you don't see the writing on the wall and don't pay attention to everything that's actually happening. Because it's honestly, for many people, they get happier ignoring what's happening. They're like, yes, it might be happening, sure, but I don't want to think about it, I don't want to talk about it. Okay, well, if you ignore it and you just continue on and you don't factor this in, and then it ends up happening because the writing's on the wall, then you end up walking into a big problem, right? But if you plan for it and you see what's happening, you position yourself, you end up making 10, 20, 30x, which you otherwise would have probably lost, right? So you end up making a ton of money, and that's what I intend to do over the next year or two, especially as commercial real estate and real estate starts to kind of unravel, is to pay close attention and invest and pick up some really great deals. What do you think about this entire situation? Drop it below, hit the like button, subscribe here, and also on my second channel, I have a new office coming, and the office is getting designed now. So this new office is going to have a podcast, so it's going to be really cool. So be sure to go subscribe over there if you want, and LinkedIn, Twitter, Instagram, and TikTok up in the banner. And if you know fixing credit, we'd love to help you. Again, at GreatCreditFast.com. Give us a call at 561-430-5900. I'll catch you guys in the next video.